This is not financial advice, and I'm not promising any price target. I'm walking through what two mainstream sources say would have to be true for $200 silver to even be on the table, and I'm framing it as scenarios, because if silver ever does something that extreme, it usually happens in the kind of environment nobody actually wants to live through. Now, the reason $200 silver suddenly feels like it's everywhere isn't because people got smarter overnight. It's because silver already did something that snapped everyone's psychology in half. CBS notes silver went from around $30 a year earlier to over $100 during the same period. Gold ran from $3,000 to over $5,400. And then silver cooled back down to just under $80 as of Feb 9, 2026. That one sequence, parabolic up, violent down, creates a new kind of market. A market where people stop asking, can it move? And start asking, how far can it go if it breaks again? And that's exactly where your title lives. $200 is not a meme anymore. So here's how you make a 20-25 minute video that feels like a thriller but stays credible. You don't sell $200. You sell the 5 converging forces that would make $200 even mathematically plausible. Then you tell them why most experts still think it's not likely in 2026, unless the world goes a certain way. CBS is blunt. Most experts they spoke to don't think $200 is likely in 2026, but they acknowledge it's possible under extraordinary conditions. And the Motley Fool take on the same basic question leans even harder the other way. It argues history suggests silver is volatile and that $200 this year is unlikely, and it highlights a very specific geopolitical industrial catalyst that drove the last spike, China export restrictions. So you've got the perfect tension for retention. The crowd wants a moonshot. The experts say, possible, not likely. And the market has already proven it can move faster than anyone expects. Now let's build the world version, because the only way $200 silver happens is if multiple global systems lean in the same direction at once. I'm going to give you a long-form voicer script you can read straight into camera, loopbacks, let me say that again, and a clean disclaimer line baked in, aimed at 20-25 minutes. Here we go. People throw around $200 silver like it's a joke until the day it isn't. Because the market already showed you the part that matters most. Silver doesn't need permission to move. It needs a trigger, and then it needs a structure tight enough that the move feeds on itself. CBS points out silver's price went from roughly $30 a year ago to over $100 at the peak of the run, then cooled back down to under $80 as investors took profits and reassessed the economy and inflation. Let me say that again, because this is the whole psychological reset. Silver already did a 3x move in a year, and then ripped people's faces off on the way down. So the question isn't, can silver move? The question is, what combination of forces would make an extreme move, like 200, mathematically plausible? And here's the part most channels won't tell you because it's less clicky. CBS says if silver ever did catapult to $200, it would likely be after severe economic distress. Translation, if you get your $200, you probably won't like the world you got it in. That's the honest fear. Now your title says, Analysts confirm $200 is not a meme anymore. Let's frame that correctly. Analysts and experts are saying it's possible, but only under extreme conditions. So the video isn't $200 confirmed. The video is, here are the 5 converging forces that would have to line up. And here's what breaks the thesis, because that's how you keep credibility while still making it feel like the edge of a cliff. Now, force number 1 is inflation and currency stress, not vibes, mechanics. CBS quotes Peter Reagan, Birch Gold Group, saying $200 silver by 2026 is possible, but would likely require an extreme decline in currency values or an extreme increase in inflation. That's the first force. An inflation shock? A currency devaluation shock? Or both? And it's not hard to imagine how the world could stumble into that. When you have energy shocks, war risk, trade wars, supply chain disruptions, and policymakers trapped between fight inflation and avoid recession, you create the environment where hard assets become a lifeboat. But don't miss the subtlety. This isn't inflation is high, therefore silver she's $200. It's inflation becomes uncontrolled or currency confidence breaks, and that triggers the demand event. Now force number 2, a supply-demand imbalance that doesn't resolve fast. CBS says the underlying drivers behind silver's rise remain. Supply is still tight and investor demand remains strong. And the Motley Fool explains why silver is different than gold. Silver is heavily used in industry, absorbing over half of its annual supply, and it frames silver as an industrial supply versus demand story. Let me say that again, gold is mostly a monetary story. Silver is a monetary story and an industrial story. That makes it more explosive and more dangerous. Now, if you want $200, the market has to believe the supply shortage is real, persistent, and not fixable quickly. That's what turns tight into panic. And CBS frames it exactly like that. For $200 to happen, multiple drivers would need to align. Imbalances in supply and demand, increased investment demand, strong industrial demand, and limited substitution. That limited substitution phrase is critical, because force number 3 is industrial demand, but also the threat of industrial demand turning against you. CBS explicitly warns that silver's biggest threat to a sustained rally might be its own success. If prices climb too high, industries try to find alternatives, and they're already trying to substitute or thrift silver. And then CBS drops a China-specific bomb that fits your title's China hook. It mentions a story coming out of China that the development of silver-free photovoltaics has picked up pace, meaning if the narrative of silver scarcity collapses, investor flows could taper off. So the world angle is built in. China matters because it's a manufacturing superpower. If China pushes silver thrifting tech, it can dampen industrial demand growth. But, and this is your hook, if silver demand is strong while substitution is limited, silver becomes the bottleneck metal. Now, force number 4, China supply control and export restrictions. This is where the Motley Fool article becomes your geopolitical pillar. Motley Fool says silver surged 144% in 2025, partly because investors feared a supply shortage after China announced plans to restrict exports starting Jan 1, 2026, and it says those restrictions will remain in place until the end of 2027. Let me say that again because it's pure world. China is the world's second largest exporter of silver, and it tightened the valve. And the Motley Fool adds the motive. China is a top electronics manufacturer, so it wants to protect domestic supply chains by stockpiling raw materials. And the restrictions also give it leverage in trade negotiations with the US and Europe. That's your China force, not China buys silver, therefore moon. It's China can influence both supply availability and geopolitical risk premium. Now here's your first big loop back for retention. So far we have 4 forces: currency, inflation stress, tight supply deficit, industrial demand versus substitution, and China controlling the flow. Now here's the 5th, and this is the one that turns a rally into a snap. Force number 5, a market structure event. CBS quotes Brett Elliott, APMEX, saying silver won't detach from trend again from a minor disturbance. It would need something intense to create another parabolic move, like a major exchange defaulting on its obligation to deliver silver. Let me say that again, because that's the line that makes people sit up straight. For a true parabolic move, Elliott says it would need something like a major exchange defaulting on delivery obligations. That's not price target analysis. That's system stress analysis. Now, do we want that? No. But does the market sometimes price the risk of it? Absolutely. And that's why $200 isn't a meme. It's the upper tail of a distribution where the catalyst is structural stress. Now, pause, because we need your compliance-safe disclaimer line right here. At the moment, maximum emotion hits. I'm not saying any exchange will default, and I'm not saying silver will hit $200. I'm explaining the type of extreme conditions experts say would likely be required for that kind of price move. That line keeps you clean. Now you're free to fear max the scenario because you're not promising it, you're mapping it. Now we start building the actual 20-25 minute narrative arc. You open like this. Everyone keeps asking, will silver hit $200 in 2026? And most experts say not likely, but they also admit it's possible under extraordinary conditions. That's straight CBS. Then you punch in. And if it happens, it's not because of one thing. It's because 5 forces converge. Now you go force by force with mini stories. Force 1 story, inflation shock, currency confidence. You say, Reagan's view is blunt. $200 silver probably implies extreme inflation or currency devaluation. Then you turn it into a global montage. War premium hits oil. Oil hits inflation. Inflation hits rates. Rates hit growth. Growth hits politics. Politics hits currency confidence. You don't need to cite every sentence there. It's reasoning, but then you bring it back. When currency confidence wobbles, people don't want promises. They want metal. Force 2 story, structural tight supply. You say, CBS notes supply is still tight and investor demand remains strong. Then you sharpen it. Tight supply doesn't mean no supply. It means the market has less slack, and when demand surges, price has to jump to ration the metal. Force 3 story, industrial demand and the substitution war. You say, silver is an industrial metal in a way gold isn't. Then you hit the warning. CBS says high prices cause industries to thrift silver, and it specifically mentions silver-free photovoltaics development in China. Then you use that to keep suspense. So the question isn't just how high can silver go? The question is how long can silver stay high before substitution accelerates? Force 4 story, China export restrictions, plus geopolitical leverage. You say, Motley Fool says China's export restrictions were a big driver of the 2025 surge. The restrictions began Jan 1, 2026 and run through 2027. Then you add the world edge. China is stockpiling for its own manufacturing needs, and it can use restrictions as leverage in trade talks. Then you insert uncertainty. And Motley Fool notes Trump planned a China trip in April with trade talks on the agenda, meaning policy could change, and if China loosened restrictions, it could trigger a sell-off. That's huge. That's your what breaks the thesis, because now you can build a two-path fork. Path A, restrictions hold, demand stays strong, supply stays tight. Path B, restrictions loosen, the market reprices supply, fear lower, silver can dump. Now, Force 5 story, the event. You say, CBS quotes Elliott, it would take something intense, like a major exchange defaulting on delivery obligations, to get another parabolic price move. Then you make the fear max point without accusing anyone. That's why traders watch delivery windows, lease rates, and physical premiums. Not because it guarantees anything, but because it tells you when stress is building. Now we hit the first major loop back. This is how you keep people watching at minute 8:10. Let me say that again. $200 doesn't come from hype. $200 comes from convergence. And convergence comes from the world getting messy at the exact moment the metal is already tight. Now you move into the why it might not happen segment, because credible fear is always two-sided. CBS says most experts aren't counting on $200 in 2026. Elliott calls it possible, but slim odds, noting silver would need to rally over 250% in the next 11 months. And the Motley Fool adds the historical trap. Silver is extremely volatile. It crashed after 1980 and took 31 years to recover, then crashed after 2011 and took 14 years to recover. Let me say that again because this is where you save your audience from getting wrecked. Silver can give you life-changing upside and life-changing downside. That's why CBS quotes Stanzioni, warning against leveraged products like leveraged ETFs or futures, because silver's volatility can wipe speculators out. That's your responsible line that also builds trust. Now you go world again. If the global economy weakens, industrial demand can slow. If the dollar strengthens, metals can face headwinds. CBS explicitly says disciplined monetary policy or a stronger dollar index can negatively impact demand, and higher prices can increase mining and recycling, limiting price increases. Now we're in the last third of the video where you do the checklist that your viewers love. 3 things. Simple, repeated. But you asked for world, so we make them global. 1. China policy risk. If China tightens restrictions further or keeps them locked through 2027, the supply fear stays alive. If it loosens, you can get an aggressive repricing lower, as Motley Fool warns. 2. Substitution risk. If silver-free photovoltaics and other thrift tech accelerates, industrial demand growth can weaken, and CBS says that could cause investor flows to taper if scarcity narratives collapse. 3. Macro shock risk. If inflation reaccelerates and currencies devalue, experts say that's the kind of extreme environment where $200 becomes possible, but it likely comes with severe economic distress. Now you loop back again because we're at minute 18:20. So when someone says $200 is guaranteed, they're selling you fantasy. And when someone says $200 is impossible, they're ignoring the fact that silver already proved it can go parabolic under the right conditions. The correct answer is most experts say it's not likely in 2026, but it's possible if the world forces the convergence. That's CBS in one sentence. Now you land the plane with a closing that's fear max but compliant. If silver ever goes to $200, it probably won't feel like a victory lap. It will feel like a warning light, because the experts CBS spoke to say that kind of move would likely require extreme inflation, currency devaluation, or a crisis-level event in the market structure. And that's the real reason this topic is exploding right now. Not because $200 is a meme, because the world is starting to price scenarios it used to laugh at. Final line to end the video, clean and strong. I'm not here to promise you $200 silver. I'm here to show you the 5 converging forces that would make it mathematically plausible, and the 3 things that could kill it before it gets there.